the call right now. We'll come back to you and take stock of the market in another half an hour. But for the time being, let's just, before we get to our next guest, talk about the IT space as a whole. And Rima, I know you've been talking to a lot of people on the street just to get some handle on what this entire implosion of SVB and some of the other financials in the US, what it means for Indian IT companies, because they're highly exposed to the US markets. What are you picking up?
Well, so the fear in the market is that US banks are under pressure, and US banks are the largest sectoral contributor to Indian IT companies. Now, Indian IT companies derive about 30 to 35% of their revenues from US banks, and the market is worried that these US banks are under pressure, which could impact growth rates in India. Now, bear in mind that right now it's only the regional banks where there is some fear, and the large US banks like JP Morgan, Wells Fargo, etc. These are the big clients of the Indian IT large caps like the TCSs and the Infosys of the world. The pressure is on the regional banks, and it's the mid-cap IT companies which have an exposure to the regional bank. So here I want to talk about just two of them. One is Coforge. They have an exposure to a bank called Fifth Third Bank, and Fifth Third Bank shares were down 13.5% yesterday. And Mphasis has exposure to First Republic Bank, a share price of which was down 61-62% yesterday. Remember, it's not that there is a run on any of these two banks, but there is fear on these regional banks, and mid-cap IT companies, some of them have some exposure to these banks. So that's the worry in the market, which is leading to a sell-off today. But even if there is no contagion impact, what the street fears is that banks on the whole are going to get cautious. They may go into capital conservation mode, which means they may not go ahead with their tech spend, or tech budgets may get delayed. Sales cycles could get longer, which then clouds the IT services, revenue visibility. So that could be the base case scenario now for, from a market point of view. Even though there may not be any implosions which directly impact any of the Indian IT companies, there could be some slowdown. Dipan, do you want to comment on any of these mid-cap IT companies like Mphasis, Coforge? If you do have any holding, what should investors do?
Yeah, good afternoon, Rima, and thank you for having me on your show. I think you put it really well that, right now there is no fear about any cancellation of contracts or any further days for furlough, but certainly the sentiment in the US banking sector is going to be morose, and that's going to affect at least new projects which these IT companies may have to start, or entire process of decision-making process will get elongated. So you are going to have to deal with that kind of uncertainty, and Coforge was a fantastic outperformer. Last 2-3 quarters delivered industry-leading growth rates. They've been very aggressive when it comes to getting new contracts and new projects. But if a big client like this were to put a pause, then certainly the growth rates may get affected. So I think given the situation, one should be a bit cautious as far as the entire IT pack is concerned. And I think maybe the time to sell is not is perhaps gone, but at least one should not take fresh investments in any of the IT companies at this point of time. And this could, deepen even further, as we have seen back in 2008. One doesn't really know. And in somewhat, we are in uncharted territory. So best is to just wait and watch and see how this evolves.
Yeah, Dipan, hi, good afternoon. Broadly, otherwise, what's your view, though? I mean, still cautious, Dipan? And just wait in the sidelines.
Good afternoon, Prashant. Yeah, good afternoon, Prashant. See, I was just thinking that, while I was listening to your commentary before the show started, just after the show started, that fundamentally, actually, nothing has changed. Corporate earnings, whatever they are, they are. After the last earnings seasons, we have seen some upgrades, some downgrades, and we're very clear which sectors are doing well and where the stress is. But yet the market has corrected from those levels, and we've gone down frankly below the 200-day moving average. And although I don't follow technicals so much, but some of the key points, I think, like breaking of the 200-day moving average is a cause for concern, as well as the fact that the entire pattern is of lower tops, lower bottoms. It's very clear and evident. And in a situation like this, however bullish you are on the stock market, and you may have a lot of stock ideas to invest in as well, but maybe from timing perspective, you just need to wait and watch. And it's very difficult always to catch the bottom. But still, I think the risk reward doesn't really favor you. So it's better to just wait out these trying times and look for investing once you have the first signs that the markets have reversed and the technicals have improved, FIFOs have started coming in. some of the broader issues like Adani Group stocks and all those issues have got perhaps resolved. And there is some visibility as far as US banking system is concerned. I mean, we're asking for a lot at this point of time. But right now, I think as I see the screen, I would like to just wait and watch and be cautious.
All right, Dipan, stay on. We have more questions coming up for you, but we do have to take a quick break before that. On the other side, we'll also be joined by our Alpha Manager of the day, Aman Chauhan of Abacus Asset Management will join in. We'll figure out how they are negotiating this market fall.